In today's video, we're going to discuss if it's time to buy the dip in Yieldmax and Defiance, or should we wait for a bigger drop in the market first. We'll also discuss the reverse split that's coming up in Defiance and why I'm not adding to Cornerstone on the recent market dip. We earn over $300,000 per year in dividends, as you can see below, from Yieldmax, Cornerstone, Defiance, and some modest margin usage. These all help me live financially free from a 9 to 5. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. We're also outperforming all the indexes with our approach. We're up 24% for the year. I always talk about my percentages not to brag, but to show you that this strategy works using Cornerstone, Yieldmax, Defiance, and some modest margin usage. We're up 24%. The S&P is up 15, the Nasdaq's up 18, the Dow's up 6, the Russell's up 7. We're also down 3,700 on Friday, or 0.34%. That beat the indexes, as you can see above. The S&P was down 0.71, the Nasdaq was down 0.81, and the Dow is down 0.93. So we're beating all the indexes on a daily basis and on a year-to-date basis, again, using our approach. If you're new to this channel, for every $1 you put in your account, you get $4 of purchasing power. I'm just using a small amount of my margin purchasing power to get ahead. All the greats that I know of use debt to get ahead, and my dividends of over $300,000 per year will pay back my margin debt in less than 1 year. I'll then be left with all these dividend paying assets to myself, paying monthly cash flow for life that qualifies to banks for loans. This is how we live the FIRE lifestyle. We don't just collect dividends and outperform the market. These dividends qualify to banks for loans. This is how we get a house or a car or even personal loans to level up our account with without a 9 to 5. Because if you want to have a house, you have to have pay stubs and qualifying income. Trading gains are not accepted by banks, and most traders lose 90% of the time. So we just buy the indexes and we buy dividend paying names that give us the qualifying income and also help give us the outperformance. Because if you buy the indexes, you're going to go with the indexes. But if you use some margin usage like I do, a modest amount of margin, then you'll outperform the indexes if you buy the indexes. So it's simple math here, and the dividends that we earn will pay back our margin debt in less than a year. I'm not worried about my margin interest on my margin debt because I've negotiated it down twice. So let's go into the charts of the Nasdaq first, because we need to see if it's time to buy the market or not. And as you can see, the QQQ, the Nasdaq, is almost at the 50-day moving average, or this white line. If you need help understanding moving averages, that's in my volume 2 e-guide. So we're here almost at the 50, and we don't know if we're going to blow past this or not. But normally when you approach the 50-day moving average, it's a significant support area. So I go ahead and start buying regardless, okay? Even if things don't look good, you start buying when you approach the 50. Now I'm nibbling, okay? I'm not buying everything all at once. I'm buying in positions, but since we're approaching the 50-day moving average, I'm nibbling here on YMAG and QQQY, because both short-term investors and long-term investors like to start their positions around the 50-day moving average. So we're buying some YMAG, but be aware YMAG is 50% maintenance and it's not fully diversified. If you need help understanding maintenance, that's in my volume 3 e-guide. The key to withstanding margin calls and living free from a 9 to 5 is having high available for withdrawal. So my available for withdrawal is over 290,000. Yes, it's fallen from being up about 320,000. My account value is around 800,000, but my available for withdrawal was around 300,000. Well, the market's pulled back recently, so my available withdrawal has fallen, but we can still withstand over 20% corrections in the market from here and still withdraw freely out of our account to pay our bills. So all of my bills are automated out of my E-Trade account. I can swipe my E-Trade card and go wherever I want in this world. I can add to my margin debt anytime I want to, because you can spend out of your E-Trade account, your brokerage account, again, even with debt, okay? So with this debt, this 291,000 in debt, I can go swipe my E-Trade card and go add to it. I can buy cars, clothes, shoes, whatever I want with my margin debt. And the interest rates on my margin debt are so low that it's better than using a mortgage or using credit cards. So this is how I spend out of my brokerage account and live the FIRE lifestyle. But the key is having high available withdrawal, which comes from low maintenance names. And YMAG is 50% maintenance, so just keep this in mind. Also, again, YMAG is not fully diversified. This is why I bought more QQQY, because QQQY is 30% maintenance and it's fully diversified. It also has a bigger dividend yield and it falls less on down days, which we covered in times past. So QQY, 30% maintenance. You have to buy Defiance and Yieldmax on the dips. I don't reinvest the dividends for these funds. I only reinvest Cornerstone because Cornerstone is a 5-star fund and it drips its dividend down at the NAV, down at the bottom for free money every month. See, Cornerstone moves upward, left, or right here on its chart, and it's a 5-star fund. In my last video, someone was asking, aren't you concerned about the level of dividend cuts Cornerstone has every year? Every year they cut their dividends and the stock is moving downward on its chart. Well, obviously you have to factor back in dividends, drips, and rights offerings when playing Cornerstone. So that's how you have to play Cornerstone. You get 20% dividends from Cornerstone every year. It sets its dividend at 21% of its NAV. You also get 20 to 30% premiums that it averages per year on top of the 20% dividend. And you get the special drip at NAV, which if you own it up here, it means it's reinvesting the dividend down at the bottom here for you for free money every month. No other fund in the world does this. I don't get paid by Cornerstone, Yieldmax, or Defiance. I'm just sharing what works for me. But you have to play Cornerstone properly. You have to time it between its rights offerings, and that's in my Volume 4 e-guide. When you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. We have many channels here that you will find beneficial. We have a options channel, Yieldmax channel, Defiance, you name it. But the most important feature of this Discord chat room is the Cornerstone rights offering announcement. The reason why I'm not buying more Cornerstone on the dip recently is because it didn't dip, okay? It was so strong. Look at this recent chart of Cornerstone. It's barely pulled back, whereas the S&P itself has pulled back much more, okay? So Cornerstone is holding up strong. It always does this. Every year I've been in Cornerstone, it's always the strongest fund that I have in my portfolio. No wonder it's 5-star, and that's why I have 400 grand in Cornerstone. But I also have 200 grand in Defiance because, again, it falls less on down days. It has low maintenance, just like Cornerstone. Cornerstone has low maintenance, and it has a huge dividend, okay? So it has a bigger dividend than Cornerstone and Yieldmax. It falls less on down days. Look, it was down 0.42 on Friday, but if you look above, the NASDAQ was down 0.81. So this is a big anchor to my portfolio because it's indexed. You have to stay indexed, and Cornerstone matches the index. It matches the S&P and NASDAQ roughly. And then QQQY is the NASDAQ. So, of course, I'm going to be owning Defiance funds. I own JEPY, QQQY, and IWMY because those are the 3 largest indexes. So this reverse split that's coming up with Defiance, okay, I'm really disappointed to hear people worried about this stock split because I've already educated everyone on stock splits with Tesla in times past. We made tons of videos on Tesla's reverse split. Nothing happens with a reverse split, okay? That's what you have to know. Nothing changes with the reverse split. It's just cosmetic. So they only do this to make the share price higher so that more institutions and more investors can be confident in investing in the share price above 10 a share. A lot of times when something falls below 10 a share, institutions and certain investors have rules to not buy stocks under 10 a share. So this is just for cosmetic reasons, and if anything, it helps our maintenance. Stock splits help lower our maintenance because as the share price rises, the maintenance falls. So as you know, when you're living the FIRE lifestyle, you want low maintenance so you can keep your available withdrawal as high as possible, okay? I can withstand over 20% corrections in the market and still withdraw freely out of my account. And if we were to have over a 30% correction from here in the market, well, I would absolutely clean up on my put options. I've studied the way that other professionals use their put options, and someone said you can't look over to the right and see that you're down in your puts. Well, we started our puts at the beginning of the month, and the market was going up and up and up. So, of course, my puts were down to start the month, but our puts were up 100% on each of these down days, okay? 100%, 100%. That just shows you what they're capable of doing. That's why I put them in the video. So you can't see the day's gains here right now because it's the weekend, but you can see the total gain. We're up 54% in the QQQ put and 23% in the SPY put. Now, this is nothing for me. I only put $100 in each option because if you compound that, it's over $1 million. So I keep my insurance positions small with SPY and QQQ. If you need more help understanding how I insure my portfolio with put options, that's in my Volume 5 e-guide. Many of my clients have reported back to me and told me that the put options are working for them. They're up over 100% in their put options. And so we're not up dollar-wise a lot in these put options. However, if you were to get a 30% correction in the span of a day or a month, these put options would be worth, again, over $1 million in the event of a crash. So I'm not worried about crashes in the market because my put options will make me more than I lost. And also my dividends pay back my debt in less than a year. So as each month goes by, if we have a 3% correction in the market this month, my dividends will come back in this month, paying down my leverage. So my leverage just goes away. So if we have a correction over the course of a year, well, then nothing's going to happen to me because my dividends just keep coming in and they keep raising my available withdrawal. But if we have the correction over the course of a month, well, then my put options will absolutely clean up again in the event of a crash, of a true market crash. You don't make a lot of money on just 1 or 2 down days with these put options, but if we have a true crash, then we'll make over $1 million. We don't want to put too much money in the put options up front because put options are a losing endeavor and you don't want to just keep throwing away money on insurance. But we're at the 50-day moving average here on the QQQ chart. So we don't know if we're going up or down from here. So I rebalanced FANG because we're at the 50-day moving average in QQQ, but I also bought some FANG to offset whatever losses we may encounter with FANG. So FANG is the triple short for FANG, and this is how I keep on my insurance for my triple long. So I keep put options on for my overall index plays, and then I keep FANG on to hedge against FANG. But be aware of the maintenance for FANG and FANG. They're both 100% maintenance. That means they suck up 100% of your equity. Again, if you need help understanding maintenance, that's in my volume 3 e-guide. Okay, and then lastly, I added to the Russell because the Russell is breaking out. We made a video on small caps yesterday and no one watched that video. That's a shame because small caps are really breaking out. Look at this chart. Okay, Tom Lee loves small caps. I love Tom Lee. I follow anyone who follows the facts and is constantly bullish because you have to be bullish on the market. The market averages 7% per year over time. So who could ever be negative on the market? I don't know. So I bought a little bit of TNA because it is the Russell 2000 and you get the most exposure with the Russell. You get the most leverage with the Russell by buying TNA, but it's 75% maintenance. So I bought more IWMY as well because IWMY has lower maintenance at 50% and it has a 70% yield. Okay, you can't see it here. I don't know why E-Trade's not showing it, but IWMY again has between 70 to 90% dividend yields paid monthly, and the maintenance is lower than with TNA. Instead of buying more TNA though, I sold puts on TNA instead. So I have 2 more contracts here on TNA. So we got $1,300 for selling a contract on TNA. So we have $2,600 in total from selling these 2 puts on TNA. I buy puts for insurance, as I just showed you. That's in my volume 5 e-guide. And I sell puts to get more income and lower my margin and risk in the process. And that's in my volume 6 e-guide, selling put options. So TNA, we got $2,600. That lowered our margin by $2,600. It also lowered our risk significantly because we have a $50 strike price for TNA, minus 13. So that puts our cost basis below the 40s, in the 30s. And this is a much lower price than everyone else is controlling TNA at. So you have to be aware of TNA's high maintenance and decay issues. So I like to sell the puts and give myself enough cushion below the strike price of 50 to offset any kind of market weakness and decay in these triple leveraged small cap funds. So I sell puts on TNA to offset the risk and decay in TNA and to lower my margin. And then I buy IWMY for my dividends on the Russell and for some upside exposure. But most of my upside exposure with the small caps comes from either TNA, the stock outright TNA that I also bought shares of, or ASG and OARC, which again, I made a video about yesterday. If you want to go see those other small cap plays that I own, go check that out once again. So if you need more help doing what I'm doing, email me for my e-guides at aikentod48@gmail.com. When you request me for my e-guides, I'll send you back the standard template for pricing that I send everyone else. It'll say something like, hey, such and such, here's more information on my e-guides, etc., etc. Remember, Discord access is free for life when you buy my e-guides, and my phone number is free for life when you buy my e-guides, so just keep this in mind. If you like the video, click like or subscribe, and I'll talk to you soon, everyone. Thanks.